Hey everybody, it's me, Gregory Mannarino. It is Thursday, June 20th, 2019, and we have to talk about a lot of things. Before you even go further with this video, please, if you find anything here interesting or enlightening, share this video, get it out there. Okay, now, with that said, as I am doing this video blog, and this is going to come as no surprise to a single person that follows this blog, just yesterday, when we found out that the groundwork has now been laid for not just a rate cut, but yesterday I explained to you that the Federal Reserve and all world central banks are going to go nuclear. I explained yesterday that we were going to see record highs again for the stock market. Well, wouldn't you know it? The S&P 500 right now is at a new record high. Stocks are rallying across the board. It's a whole new world today. Literally, it's a whole new world. Last night, the U.S. 10-year yield dropped below 2%, and the 30-year continues to come down. I have explained this to you for months and months, that no matter what they do, no matter how many times they want to cut rates, it's not going to prevent the long end of the curve from dropping. I have also explained to you for months and months to not short this market. People, I cannot stress this to you enough. And I keep hearing from people, even this morning, Greg, I wish I would have listened to you yesterday. I went short the market at the close. I got killed right at the opening. Please don't short this market. I know how badly you want to. I know how none of this makes sense to you. And you believe that these distortions are going to correct like immediately. They're not going to. The distortions that exist in this market are going to get exponentially worse from where we are right now. Again, in the videos that I did yesterday, the last one, I explained to you that we haven't seen anything yet, and I've been talking about this for weeks with regard to the desperate acts that central banks, all of them collectively, are going to do. They're all going nuclear. They're all going to cut rates as far as they can go, deeper into the negative in certain parts of the world, inflate the debt beyond anything you can even imagine. We haven't seen anything yet. All this will do in this environment for now is open the doorway wider for more cash to flow into the stock market. Think about why. It's a deliberate act. You cannot put cash into a debt unit or into a government bond or something. You can't do it. Because why? If you look, the yield curve, like I'm explaining to you, it's inverted. It's going to get a lot worse. You can't put cash into a government bond here because you will be getting robbed blind. You can't even keep cash in a savings account because you're getting robbed blind. What this is doing is, again, creating an environment of risk because there's nowhere else to put cash to work. This is going to get a lot worse. Record highs for the stock market are going to continue. They're going to continue here. And of course, the president is going to come out and say, look at the stock market. He will not tell you to look at the debt market or the bond market. Now, we all understand that, or at least you should, for me explaining this to you, since time immemorial, the yield curve issue, the inverted curve, is a big tell that trouble is coming down the pike, but it's a lagging indicator. I've explained this to you many times for years. So even though the yield curve we have no curve. There's no curve anymore, and the long end of the curve is going to continue to drop, regardless of the Federal Reserve going nuclear. In fact, that's going to make it worse. We'll talk about that in a second. It does not mean stocks are not going to go higher in this environment. There's no, listen to me, sit down, take a deep breath. There's nowhere else for cash to go. And the reason why I am overstressing this is because it hurts me to hear when people short this market. And I'm telling you not to do it. I know you might think you're smarter than I am, and maybe some of you are. But I promise you, that if you short this market, you're going to lose, and you're going to lose big. Now is not the time to short this market, regardless of what the hell happens in the distorted yield curve, which doesn't exist anymore. Let me put another perspective on some of this. The Federal Reserve is going to go nuclear. All world central banks are going to do the same thing. What does that mean again? That means they're going to take the short end of the yield curve, okay, and they're going to try to push it lower. It's going to work. It is going to work. And what they're attempting to do is prevent, and they can't stop this from happening, the longer end of the curve from inverting the short end. It's a Band-Aid effect. You're going to get this yield curve, a little bit of a tilt down like this when the Fed announces what they're going to do in July. They are going to do this. And we're going to hear more central bank nonsense. The ECB, they're all going to do the same thing. They are determined to fleece the middle class. Look, understand what the real issue is. Markets are not allowed to determine fair value anymore. Stocks can only go in one direction. Generally, you have boom cycles and bust cycles. Boom cycles and bust cycles. You know, it kind of goes like this. Not anymore. Now everything goes in one direction only. And world central banks are doing everything they can to make sure that continues. It's not healthy. It just magnifies distortions that exist, and they correct harder to a fair value at one particular time. We don't know when that time is going to be. So if you're in the stock market, you ride the wave. You ride the wave and you do not short it. I know how bad you want to. If you do, you're going to get hurt. Period. I don't know another way to put that. So accept where we are at, because you cannot stop it. You can't do it. You have the President of the United States screaming from rooftops about rate cuts, screaming from rooftops about more quantitative easing. Good cop, bad cop, the Fed will comply. It's a game. It's a game that they're playing. We're going to get rate cuts. We're going to get quantitative easing. The economy is going to continue to free fall. That's why they got to cut rates. This is why they have to introduce more quantitative easing. We can't grow out of this. Understand, no amount of rate cuts, no amount of quantitative easing can allow us to grow out of this environment we are in. We are in economic free fall on a global scale. The fact that world central banks and their collective leaders are doing what they're doing now should prove to you that the economic meltdown, the collapse is here. We're in it. You're witnessing it right before your eyes. But that does not mean, yet again, I'm going to beat a dead horse here, that the stock market is not going to go higher. Ride the wave. Buy the dips for now. Let the yield curve invert further. They're going to attempt to prop it up. It's going to work for a short period of time. Look, I hope I've made sense to you in this video. If you need to listen to it 10 times, just do that. And understand where we're at. It's a deliberate act. The disconnect between the markets and the economy is going to get monumentally worse. Accept it now, because you can't stop it. All right, with that said, I'm going to let you all go. Please share this video. It's important. If you're on my team, I'm counting on you to do that. This guy does love you a lot. I have an interview later. Hold on a minute now. With the Money Show. I don't know if it's live or not. Anyway, when it comes out, I'll post it, and then I'll do my follow-up video at the end of the day. Again, this guy loves you. Please share this video. I will see you soon.